Good afternoon or good morning, wherever you are in the world. Yeah, I'm Neil. I hope you can hear me. Who have we got on? We've got Brenda, we've got Claudia, Helen. Hello, Helen. Janine, John. John's on twice. Margarita, Noreen, Ray, Richard, Steve, Suzanne. Welcome to you all. There's a couple more Animesh's joining. Morning, Animesh, or afternoon, I should say, etc. Good. Good. I'm sitting in my basement in Thames Ditton in Surrey, England. It's kind of blustery day. One of our lockdown strategies was to have a put up a gazebo in the garden so we could meet our friends outside. We're not going to be allowed to do that from Thursday. And in the night, my wife found it blowing away. So when I came down this morning, she's standing holding it up. So it's windy today. So maybe you can go into the question box and tell me where you are in the world and what the weather's like where you are. It's the least of our problems, the weather, probably in risk terms, but I'm always interested to know. So if you get in the question box, you can put in where you are in the world and let me know. Richard's in Sussex and it's sunny. Okay, Animesh, it's pleasant in India. Okay, well, what sort of temperature is that? Margarita's in Malta. Of course you are, Margarita. Yeah, yeah, weather-wise. Yeah, how's everything else in India, Animesh? Birmingham blustery. Yeah, it is a bit, Helen. Mel's in Oxford. Ray, yeah, bright and sunny. John moved to Hong Kong from Thames Ditton. Is that what you're saying? Wow, whereabouts in Thames Ditton do you live, John? I live on Church Walk. You probably know where that is. It's right in the middle. Born in London. I went to London on Saturday night. Obviously, we realised that we weren't going to be able to go soon. I went. It was quite fun. I went to Borough Market and lots of people about, quite young people, younger than me on the whole. But yeah, it was nice to go to London. I've forgotten what it was like. Oh, you lived over Long Ditton. Oh, good. Long Ditton and Hong Kong. I wonder what the similarities are. Yeah, I've been to both. Yeah. Claudio, it's rainy in South Africa. Okay, good. So welcome to the webinar. Nice to hear you all. I know it's difficult times for us all, but hopefully, actually, some of you can put up here in the question box, are all you December candidates, i.e. you are all going to sit your exam in December, or is anybody out there a June candidate who couldn't sit their exam in June because of the virus, but have joined this webinar today? Noreen, you're a December candidate, Noreen. Okay, any June candidates out there? Okay. Okay, Helen, yours June postponed. James postponed. Okay, Ray. Okay, so you might have been on some earliest candidates. So presumably you'd done your studies, it got postponed, and either you've picked up your studies again, or you left, you've done all the modules and you're just getting into revision mode now. So you've got about a month before the exam, haven't you? So this is me. Obviously, I work in the insurance industry mainly, but I do risk management for IRM. And I think your exam is the week of 7th to the 11th of December. Now, as these lockdown rules keep changing around the world, I don't know if it's affecting your exam or not. Is everybody comfortable with where and when they're going to do their exam? I'm not in charge of the exams. So Noreen's got 2nd December for module 1, is it? Okay, and you know where you're going for that, Noreen? Or can you do it at your desk? I'm not actually an expert on some of this. Yeah, so you're doing Unit 1 on the 2nd of December. Anybody else? You're all happy? Yeah. So as I say, yes, all sorted have to go to a centre if they're open on 2nd of December. All right, okay. And you know where you're going? Yeah. Man, you got to go to Pearson View venue. Yeah, okay. So you just need to, people in the UK, I know the rules have just changed again. You just need to, check with the IRM whether the venue is open, etc. and hopefully it's not going to be cancelled again. Yeah, it should be okay in Singapore, shouldn't it, Rita? Good. Yeah, right. Okay. So, as I say, we're all in risk management, making sure that we attend the exam at the right time in the right place, and we know where we're going, and we know whether we're allowed to go. Is one of the risks that we've got to manage. And so basically stay in touch with the IRM. I'm sure they'll send you an email if things change, but if you're uncertain, just drop them an email. Good. So you've got about a month before your exam. And so this is what I want to do today. For those of you on the December track, you probably remember in the midterm webinar, I went through units 1 to 4. And then so today we're going to look at units 5 and 6 a little bit. And then I want to talk about what we're going to do in terms of revising. So you can put up actually in the chat. Most of you do module 1 and module 2, I presume. Have you been through all the? Have you read all of module 1 and module 2? So you're in revision mode, or you're still sort of you've done unit module 1 and you've done the first 3 units of module 2. Where are you with your initial studies? Because probably what you're going to be doing now is hopefully you've been through the studies and you're going to be moving on to revision. So you're going to go back to your notes and start to revise and test yourself. And I really want to talk about a little bit about how we revise, but mainly a little bit about the exam and how I can help you do the exam. Done both modules and now daily revision. Oh, Melanie, you're on it, aren't you? So you've got key lists and key terms. Some of you, I've not used the discussion forum a lot this exam, but I did put up in the discussion forum some of the key lists and terms that you should remember. I didn't give you the answers. I just gave you a reminder of what I've talked about in the sessions of what I think are key terms and lists which should be in your revision notes. So you can go on there, you can have a go and comment back. This is what I think the key definition of risk appetite is, or these are 5 emerging risks faced by banks. You can do that. Yeah, Rito got good. Animesh is moving towards revision. Melanie, I think you're in good position, Melanie. Yeah, but it is like anything, and especially if our life keeps changing with exams, we'll talk about it. It's just trying to be consistent with your revision over the next month. So let's have a quick look at Unit 5 and Unit 6, and as I say, we'll talk about revision a bit and actually talk a little about exam technique and practice some questions. So in Unit 5, you're in Apostolic and Donoghue and you're in Hopkin. Those chapters. And also the essential reading is the Corporate Governance Principles for Banks, Guidelines and Systems of Corporate Governance from the OPA, the 3 Lines of Defense model from the Institute of Internal Auditors. And also you need to get in the PRA rulebook and look at the sections on the internal controls, ICAP and ORSA. And as I'll talk about, I've been drafting you some practice questions, and so I've been in all of these documents recently, and it's worth going into them. Don't rely on the study guide. Sometimes the study guide is kind of paraphrasing what's in these documents, but sometimes it's not. And as we talk when we come to do the exam, you're examined on the core text and the essential reading. You're not examined on the additional reading. So hopefully you've done the additional reading to help your risk management professionalism. But when you come to the exam, you're going to ditch anything you did in the additional reading and focus on the study guide, the core text, and the additional reading. And I would make sure you'd been in all the, not the additional reading, the essential reading, my problem, the essential reading, the core text, and the study guide. That's what you've got to focus on. And so I'd make sure I've been in each of those. And I've got a few notes from each of these in my revision notes, not just the study guide, not just Hopkin, not just Apostolic and Donoghue. And as you see, when I've done the exams, the examiners will try and examine you in all the essential reading, yeah, because that's their job, yeah. So make sure you have a look at those. So in chapter 5, they talk about the control environment. and that there's a definition, set of standards and process structures that provide the basis of carrying out internal control across the organization. So that should be in the revision notes. And they advise you to look at the PRA and the Financial Reporting Guidance Council guidance on internal control. So in terms of the Financial Reporting Council, which obviously is, its role is to make sure that listed companies, not just financial institutions, any companies listed on the London Stock Exchange, have good systems of control. So what do they think four aspects of the system they say system of control should do? See if you can have a guess. Yeah, let's have a look at your comments while you think about that. It's been a challenging few months, Brenda. Revision is chaotic at the moment. Yeah, it is. It is hard, Brenda, isn't it? You know, it's sort of like you suddenly spend 2 hours of your day goes because the government's changed the rules, and you're discussing with people and they're laughing at you, talking about the virus again. It kind of distracts you, can't it, from everything and revision. And I suppose, you know, the good thing about revision is you don't have to go anywhere to do it. Yeah, so Reto says ensure compliance with applicable laws and regulations. Yeah, so remember the Financial Reporting Council, its principal job is to make sure that shareholders are informed about the correct status of the company. Yeah, so it's really what they're focused on. And so here are the four aspects of what they should do. They need to, internal control needs to help the business operate efficiently, help to reduce the likelihood of poor decision making, ensure the quality of internal and external reporting. So from a shareholder perspective, we want to make sure that these profit numbers are right. And as you say, Rito, ensure compliance with applicable laws and regulations. So there's a list, yeah. And as I say, you're going to be putting these lists into your revision notes. And we're going to talk later on about how they test these lists. Another list is 6 purposes of internal control, although looking at that, there's 7. What are the purposes of internal control? So it might be keeping good records as well as protecting our records, compliance, safeguarding shareholders as well. And then the chapter moves on to talk about the role of internal audit. Is anybody, you can put up if you're in the third line of defence. So obviously internal, external audit and the audit committee are apart from the third line of defence. They're providing assurance that the risk management procedures, which may have been drafted by risk management in the second line of defence, are being adhered to. Clearly, again, they have a major role in financial reporting, but they're also very important in risk management. And so Hopkin discusses the role of the audit committee. And so what are the 4 activities or responsibilities of internal audit? Yeah, what's the purpose? What do these internal auditors do? I know I used to work for an insurance broker, and occasionally, about once every 3 years, suddenly they'd be like, oh, the auditors are in. And it may be the external auditors like PwC, or it could be an internal auditor. And obviously what they're doing is they're going through your files to do what? Assurance. Can you be more specific, Sylvia? So yeah, it's involved in the assurance process, but what does that mean? What does that mean? What are they actually doing? Effectiveness of internal controls. Good, Rito. So what they want to make sure is, are the organizational practices and controls, which are probably being drafted by either the first or second line of defense, are they being adhered to? Yeah. Are accounts doing monthly reconciliations? So that's the control. Is it being done? Yeah. So are we practicing what we have preached to ourselves? They've got to discuss any shortfall or non-compliance with local management. So you're not doing the accounting reconciliations in the way you're supposed to, and agree and return to full compliance. So this is what you need to do to start doing this again, or review and amend the control environment. So you're not doing this because it doesn't fit with the business process. Okay, let's talk about how you can still control, but in a way which fits better with the business process. So they may amend the controls, and that will all part of a discussion following the report of the internal auditors. Good. And then it moves on to own assessment of risk. So again, I've forgotten who works for a bank and who works for an insurance company. But you've really got to make sure that if you work for an insurance company, you also know what ICAP's about, and if you work for a bank, you also know what Solvency II or ORSA is about. So make sure. So what is the purpose of ICAP or ORSA? A couple of acronyms. What is their purpose? Evidence that key controls are working. Yeah, so Helen, yeah, so they're checking the assurance process, the internal audit process is about making sure whether the controls are being adhered to, and then reporting on that. What is the purpose of ICAP or ORSA in either Basel III for banks or ORSA Solvency II Pillar 2? What's the purpose? Calculation required for other exposures. Yeah, management of capital. Yeah, so in Pillar 1, the regulator provides a formula for how organizations have to calculate their regulatory capital, and normally and they can use their own internal model, or they can use the regulator's formula, etc. But that is normally only certain risks, market credit, underwriting risk, doesn't cover other risks, and it's normally to a 1-year time horizon. So Pillar 2 is saying, no, okay, this is the regulatory capital, but we want to understand how you're setting your capital to withstand the risk to your business plan. And that's going to be part of our discussion with you when we come to visit you. So the purpose of ICAP is to make sure the bank has assessed their capital adequacy against their business plan, and then to describe to the regulator how they've calculated their capital requirements from that. And similarly, an ORSA for the insurance companies in the EU should describe the risks of the business, not just the market credit underwriting risk, but the risks of the business to the business plan, how they manage those risks, and how they've calculated their capital requirements. So even if you don't use, even if you use the regulator's formula to calculate your Pillar 1 capital, you still have to do an ORSA to calculate your own capital requirements in Pillar 2. Good. And then it moves on to risk reporting. Yes, you're right, Helen, it's part of the supervisory review pillar 2. And then it moves on to risk reporting. And there's 2 forms of risk reporting we do. We report risk externally, and we report risks on risk internally. And I imagine those of you involved in risk management are involved in some internal risk reporting, but you also may be involved in some external risk reporting. So give me some examples of external risk reports that might be produced by a bank or an insurance company. Anybody? What's an external risk report? You know, often nowadays, your report and accounts, which will be required if you're a public company, or even if you're any company, to be published, often report and accounts have some information on the risks of the business. But what do I have to do? Yeah, ORSA, SFCR. So the ORSA is for the regulators. ARAC, what's ARAC, Richard? I don't know what ARAC is. You tell me. So an ORSA is produced under Solvency II for the regulators, and the FSCR is produced under Pillar 3 of Solvency II, and that's for shareholders, and obviously the regulator will look at it. So you needed to understand what external risk reporting requirements are required from banks and insurance companies. So banks who are regulated under Basel III will have to produce an ICAP for the regulators, and Solvency II firms in Europe have to produce a ORSA, own risk scores, for the regulators. Then in the Pillar 3, the Solvency II firms have to report a report to supervisors, and they also have to produce a solvency financial condition report, which is available to shareholders. Yeah. So is anybody involved in the production of the ORSAs or the ICAPs? You can put in here there. So they're examples of external risk reporting. And in the Solvency and Financial Condition Report, This is the AIG one. It will talk about the business and performance of the insurance company, their system of governance, the risk architecture, etc. How they value their assets and liabilities for solvency purposes, and how they're managing their capital to make sure they can withstand shocks to their balance sheet. Helen's, are you involved in the production of the annual report? You're right, the annual reports are a form of external reporting. Margarita's involved in the ORSA production, so that's useful to know. So you get any questions on ORSA, you're going to be an expert on Margarita. Helen talks about op risk, conduct risk, and reputational risk. So in then you're probably not, it's very difficult to quantify operational risk, isn't it? But certainly there's got to be some commentary about how you manage op conduct risk and reputation risk in your ORSA. These are examples of things we may report internally. So obviously part of risk reporting is to continue to inform the business units about how well they're managing the risks, continuing to inform the board upwards about how well risks are being managed. And so these are some of the key risk indicators which we've talked about in other units, which might be reported on internally because we're monitoring our risk environment. And so often we report key risk indicators, and also if we've got some controls in the business, we're going to report the key control indicators, how many people have attended compliance training and money laundering training in the last month or something like that. It's the sort of thing that we report. We might produce risk registers, we might update them quarterly, whatever. These are all kinds of internal risk reports. A couple of other things on external risk reporting. If you're US listed, then you will have to comply with the Sarbanes-Oxley Act, which talks about you have to produce documents to attest that your financial controls are in place to assure the accuracy of the financial report and accounts. And if you're a listed company, there will be rules in your country, or if you're in the UK, if you're listed, there is guidance around you do have to report certain information to your shareholders within your report and accounts. And then finally, the unit moves into corporate reputation. And there's an example recent, it's not that recently now, TSB, I think they had an IT changeover over the weekend, had a change of IT, and it was a badly managed project, and nobody could get money out of their cash machines. Not that anybody gets money out of the cash machines anymore, do they? They all use cards and things, but in those days, in the old days, that was a problem, and there was a run on the cash machines and nobody get money out. And so the TSB's reputation suffered because of the failure to manage what was essentially an operational risk. So reputation risk is really not a risk in itself. It's normally a consequence of another risk, which might cause us financial loss, but also damage our reputation. So they talk about reputational risks. In Hopkin has 4 components of our reputation, which he terms CASE. Does anybody know what CASE stands for? Anybody any good at that? Helen runs key risk scenarios to enable calculation. So you do some scenario analysis on operational risk, do you, to help the actuaries calculate the capital? It's sort of like could be a technology failure, I suppose, or whatever kind of operational risk. So does anybody know what the yeah, good. Anybody know what the CASE stands for? Anybody got a guess? Capabilities, activities, standards, ethics. Animesh, oh, you're pretty good, aren't you? Capabilities, activities, standards, and ethics. So obviously what Hopkins saying is, you know, if something gets into public domain, which diminishes our customers' perception of our capabilities, what we're able to do, or our processes or activities, what we do is a matter of context, or the fact that our standards are falling below what our customers expect, or we're not acting ethically, straight back to conduct risk, then that will damage our reputation. Yeah, so we're always trying as an organization to manage anything which will damage our reputation, the mind of our customers, or the mind of the rating agencies, or the mind of the regulators. So rating agency confidence is also important for banks and insurance companies. If we do anything with damage our reputation in the eyes of Standard & Poor's, they may downgrade us, and obviously that will cause us some problems if we're trying to borrow money or in insurance attract customers. So these are some of the key terms which should be on your revision notes, and these are some of the key lists in Unit 5. And as I say, I've got them. Here's a specimen multiple choice question in Unit 5. So they do this a lot in the exam, as you see. There's a list, and so to test the list, they give you 4 things which might be on the list or may not be on the list, and then ask you to identify which ones are on the list. So here is a list of the purposes of the internal control environment. So what is the purpose of the internal control environment? Which ones of 1, 2, 3, and 4 are correct? Is it 3 and 4? Is it 1 and 2? Is it 2 and 4? What do you think? Animesh goes for C. Anybody else? John saying B. Animesh changed his mind. Gone for B. It's a tough one, isn't it? The correct answer was C. Yeah, you should have stuck with C. And the thing is, it provides that assurance that the organization will meet its objectives. Well, it never provides that much assurance. Yeah, we can't guarantee or assure that the organization will meet its objectives. So it's a tough one because that's just in the way the words are used. It enhances the reliability of internal and external reporting. Yes, it does. It establishes short-term and positive objectives. No, it doesn't. It ensures a consistent response to risks that materialize. Yes, it does. So it is C, 2 and 4. So you've always got to really read those questions and answers carefully. Unit 6 is sort of, it's funny, and when I was writing the practice questions, it's really hard to write questions on this because it's quite a reflective chapter. It's not giving you lots of new terms. It's not giving you lots of new lists. I found it hard to write multiple choice for. It's very useful as a thing to understand. Read the case studies, think about emerging risks again, like we did in Unit 1. Hard to write questions on, I would say. So you're in Postwick and Donoghue and you're in Hopkin, and they give you various case studies in organizational risk management about failures of insurance companies or banks. And then they say, look, what risk management lessons can we learn from them? They encourage you to read the Turner Review, which was a review of the global banking crisis by Lord Turner in the UK on behalf of the Bank of England, the FSA. And he identified these key factors behind the credit crunch. So sophisticated financial products, growth of shadow banking, sort of increased dependencies and greater linkage between different financial instruments. And then he made these 6 key recommendations. Recommendations about improving the capital, accounting, liquidity rules for brochures, changing the roles of supervisors, risk management, government. So I know a lot of conduct risk stuff came out of the review of the financial crisis, but they also changed the capital and liquidity rules for banks and some of the regulations around the world. It's a question for you all. Are banks more resilient in the coronavirus crisis? Have the banks to date been more resilient to this shock? Yeah. Global economic shock compared to the sort of US housing market shock, which triggered the global financial crisis. Have the banks been more resilient? What do you think? Yes or no? So COVID is an external shock, but then the question is, can we it's a risk, it's a shock. Reto, can we withstand it? Is our risk and capitalization, risk management and capitalization strong enough to withstand this major shock? Yeah, they have been more resilient. Why they been more resilient, Brenda? Why do you think that is? Anybody? and hopefully it's what they suggest is that we learn from the past, and so hopefully we've learned from the financial crisis, and either banks are managing their risk better, they're keeping risk within their appetite more, they're putting more capital aside. Hopefully it's about risk management. I think to a degree it's been about the central banks basically extending liquidity a lot and printing money essentially. So in some regulators learned from the financial crisis. There has been a bit more, there has been market volatility, Sylvia, which you would expect. And there is a lot of volatility at the moment because of the election, as well as the virus. But on the other hand, the banks so far have been okay. But I expect a lot of what happened now has been because of furlough, because the banks have, the government's borrowed money and kept businesses floating. The banks have not suffered the foreclosures that they might be expected from such a global economic shock. So I expect the regulators continuing to monitor. But I think we probably did learn quite a lot from the financial crisis, both the regulators and the banks. They look at Barings Bank, which was where Nick Leeson was a sort of unauthorized trader about 20 years ago and carried out these unauthorized trades. Nobody picked it up. He was able to successfully cover his tracks. And then he basically brought Barings Bank to its knees when they discovered the unauthorized trades, and they had to liquidate their positions at a substantial loss. So these are the questions you should ask when you look at loss events. And as I say, in Barings Bank's case, it was caused by unauthorized trading and the fact that he was able to cover up his losses. It had been identified as a risk, but nobody thought he could get away with it for so long and for so much money. They'd probably underestimate its potential impact. And how can we stop it happening again, which is the most important lesson? Separations of functions, so whoever does the trade doesn't account for the trades. 3 lines of defense model, maybe the risk management or the internal audit would have picked up this faster. So did you complete for the other case studies? And then at the end, it goes back to emerging risks, which you've done in Unit 1 with looking at the 2 guides, the World Economic Forum, the PwC guides. And here are some emerging risks. And obviously the health risks, global pandemic is suddenly top of our list. But as you mentioned about cyber risk, which is so Sylvia mentioned greater cyber risk. It's always been around cyber risk, but actually the virus has increased some of the cyber risk because people are working from home and more reliant on digital technologies, and criminals have taken the opportunity to carry out other attacks under the cover of the virus. So good to have a list of emerging risks. So I don't know how they test that in a multiple choice really. The exam, as we're going to talk about, used to be a written exam, but now it's a multiple choice exam. And sometimes, you can't really ask what is an emerging risk. It's hard to ask in a multiple choice, but it's worth thinking about what the emerging risks are. And then they talk about understanding alternative approaches to risk management, and they look at some good risk management practices and how could your organization learn from them. And as I say, there's a definition of emerging risk, which is probably worth having in your notes for your exams. And then it's worth always thinking about what emerging risks will impact your own organization. And this is from the Zurich report back in 2016. They were talking about artificial intelligence, both driverless cars for insurance, climate change, 4D printing, 3D printing, or whatever. These are all emerging risks which will affect insurance companies or banks or both. So here are some key terms, and here's some key lists. So it's an interesting chapter, I think. But as I say, when I come to revise, I'd find it hard to write lots of notes on it from an exam point of view. So let's just talk briefly about revision, and then I think probably more important to talk about the exam. So I talked about the secrets of successful studying in the first webinar, and it's the same thing with revision, isn't it? You need to make a plan, you've got a month, and you've got to think how you're going to do this efficiently, at what time of day, and what methods are you going to use. As I say, I quite like key terms and lists, and I've given you some key terms and lists in all of the for all of the units, and have a look at the discussion forum in LinkedIn, and you should make sure you test yourself on those key terms and those lists. Focus on your revision for short periods of time, good notes, as I say, mainly key terms and lists, and you can collaborate a bit in the discussion forum. A lot of people haven't been in the discussion forum. If you want to go in the discussion forum and make some comments, then I'll try and follow the discussion forum over the next month or so. Use-based learning, so 20 minutes, look at your study notes, 20 minutes practice, try and recall what are the 5 emerging risks, what's the definition of risk appetite or whatever, and then maybe do some test questions in the final 20 minutes. So what I would do in terms of revision is I'd have a look at the specimen examination. Has everybody seen a specimen examination? Talked about this before. I think there's 60 questions in the exam, but there's only 28 in the specimen examination. But it does give you an example of the sort of questions that they ask. And Module 1 and Module 2 exam are the same now. And Module 1 has always been examined by multiple choice. Module 2 is just moving to multiple choice this year. And so there's only 28 specimen examination questions. Have a look at them, get your study notes together, decide how you learn best, and test. And I'm going to talk about how we can test ourselves when we come to the exam. You're going to be examined on the essential reading, which is the study guide, the Postlick and Donoghue, the relevant chapters of that, and Hopkin, relevant chapters of that. And also anything which is termed essential reading in the study guide. It's normally at the front of each unit. I've tried to highlight it when I went through the 2 webinars, and here it is again. So you should have downloaded, obviously the PRA rulebook is something you access via a link, just stick it in the link, but make sure you've managed to download, sometimes they take a bit of finding these reports, and that's and as you see, some of them apply to different units. The PRA rulebook is in red because you're going to need that for Module 1 and Module 2, different aspects of the rulebook, but in Module 1 and 2, but this is it. So somewhere you should have these in an electronic file, and then you should have been into them all to make sure you have notes on there. Do not just study the study guide and Hopkin and Postlick and Donoghue. You might get away with it. You might be able to pass the exam by doing that, but try and make sure you go into these other guides. Often they say, as I say, they just want you to look at the executive summary. So just at revision stage, just read the executive summary. You might think it's a fascinating report, and you might come back to it later and read the rest of it, but the essential reading is the executive summary. And from that, you need to get your key terms. Helen's done both specimen exams already. How did you find them, Helen? How did you find them? How well did you do? Out of 28, I think it is. Did you? Yeah, John's got a question. I'll come to that in a minute. Yeah. How did you get on with the exams, Helen? Tell us. So back to John's question. There is, in terms of testing, there are specimen exam questions, which you're going to download from the site. There's 28 of those in the specimen exam, in the structure of the exam, but only 28, not 60. Activities and self-assessment questions. At the end of each unit, as you run through them, you probably have been asked to do activities, but also at the end of the unit are self-assessment questions, and they're multiple choice. And you might have done them as you went along in the units. I would go back, and you don't necessarily need to read the unit again, just go and do those specimen examination self-assessment questions at the end of the unit again, and the answers are within the study guide. They're worth using just to practice multiple choice. They're just all sort of section A multiple choice questions. As I say, you can use flashcards. They're really good for lists and key terms, and you can do them online nowadays in applications like Cram or Brainscape. Brainstorm questions for yourself as well. And yes, I have done, and I am going to email out, I think, tomorrow. So Melanie, I did both mocks and passed Module 2 better than Module 1. Or what do you mean by that, Melanie? Helena, okay, about 65, 75%. Okay, so it's not a bad idea to do the specimen exam early, when you've just started your revision. And what that will say is how well you're doing. 65 to 75 probably is pass. We're not quite sure ever what the pass mark is. It kind of varies depending on how hard they think the exam is, but probably that's a pass. But reflect on, where did you go wrong? Did you go wrong on a certain section of the exam? Were you better case study questions than the other questions? Or did you go, was it certain units that you were worse on? And so when you go through the answers, it normally flags up what unit will be. Good. 1 was better than 2. Yeah, and it's often the case, Melanie, and I was talking about exams to somebody the other day. When we do exams, we're going to do module 1 before we do module 2. It makes sense. 1 comes before 2. And we're going to study it sequentially, aren't we? We're going to do unit 1, unit 2, unit 3, unit 4, unit 5, this. What happens often is we're not as good at units 5 and 6, yeah, as we are in 1, 2, and 3, because we just started with them. And when we come to do our revision, we start with them. So sometimes start with unit 6 and go unit 5, unit 4, unit 3, unit 2, unit 1, yeah, when you're doing your revision, yeah, just to make sure that you're even across the units. Or the specimen examination question said you're really weak on unit 4, get into unit 4, obviously. And it's worth, if you look at the specimen examination guide within the answers, it's worth looking at where the questions and answers came from. And it will flag up, this is from Hopkin, this is from Apostolic and Donoghue, this is from the PwC Banana Skins report, and then you can see where the examiner's going, yeah, and make sure you're in the same places, because although there'll be different questions, they'll be in the same documents. So yeah, finally, NP questions, John, that was your question. So what I've done for module 2 and module 1 is I've come up with about, what is it? It's around about 60 questions. As I say, module 2, maybe there's about 56, and module 1, I think there is 50, no, module 1 is about 50, module 2 is about 50, and module 1 is about 56. So 7 questions a unit. And what I'm going to do is I'm going to send them, get the IRM to email them out, the Word document, and Word document the answers. I'll do it that way. I won't, when I give you the answers, I'll kind of point you to the right unit for you to do, to realize where the right answer is. I might not explain fully where the right answer is. I've not done any case study questions because case studies take a while to match, but I've done section 1 and section 2 questions. And so look for an email from the IRM. If you don't have it or whatever, go back to the IRM. I'm going to send it to them after I do the module 1 session tomorrow. So exam technique, as I say, there are 3 sections to the exam. I've talked about this before. Section A is multiple choice questions. There's going to be 3 answers. You just got to choose the correct one. Yeah. Section B, the assertion and reason questions, a bit more complicated. We'll practice a couple of those. Section C, you're going to have 4 case studies, giving you a bit of context. There's probably 2 on a bank and 2 on an insurance company, no doubt. They're going to give you a page of context, and then you have to choose. The biggest thing with the case study questions, they're not that hard necessarily, but you need a bit more time to read the case study. Yeah. So try and make sure you leave yourself 30 minutes for the case study questions. So it's 16 questions, less than a third of the exam, but you need to use a third of your time on them. That'll be my biggest tip on the case study questions. These are why people's fail before. They only look at the study guide. You've got to look at the study guide, the 2 texts, and the essential reading. You haven't practiced, and that's particularly the case with those section 2 questions, which are a bit tricky, the assertion and reason questions. You don't allocate your time for the section C case studies. You don't read the questions and the answers carefully. The thing with multiple choice is it's the most correct answer, not the correct answer. Yeah. So you've got to look carefully. You might say, well, I'm sure this is the correct answer. Look at the other 2 answers. Yeah. Are they more correct? Are they wrong? They're the distractors. You've got to select the most correct answer. So let's practice a few. A property insurance company will have the lowest risk appetite for underwriting business. That is what? So this is a straightforward multiple choice question. Lee, I'm going to send them out. I'm going to email, I don't know if you know the gentleman who coordinates it, Lucas, probably comes from an IRM. But after the session, I'll email, after the session tomorrow, I will email out both sets of questions to him with the answers. If you haven't got them, then go back to the IRM or come at the discussion forum and tell me. I might be able to attach them in this discussion forum. I'm going to ignore that thing. Okay, so everybody says C apart from Helen says B, and it is C. Yeah, so underwriting authorities are basically in insurance saying what's within our appetite and what's outside of our appetite. Yeah, we don't want to write plastics business, but we will underwrite other manufacturing risks. We're a property insurer, and so the answer is C. Here is a listy question, as I said. How can senior management actively promote a risk-aware culture? I'm going to give you a minute to do that. I just need to answer the door. Just the postman. So how are we doing? Looks like C. Yeah, so I think you're into Lilac, isn't it? For Hopkin and training and performance targets. They seem to make most sense, don't they? Okay, so they're relatively straightforward. And if you've done other multiple choice exams, you probably had to choose from 4, and so in the IRM exams you only got to choose from 3. So as I say, make sure if you don't know the answer, you eliminate the wrong answer, and then guess between the next 2. And then these are the assertion and reason questions. So they're going to give you 2 statements, and you've firstly got to figure out whether they're true or false, and then if you think they're both true, whether statement 2 is a correct explanation of statement 1. So here we are. Statement 1, the COSO framework is mandatory for banks and insurers. Is that true or false? And then statement 2, the COSO risk management framework was specifically designed for financial services companies. Is that true or is false? If you think they're both true, is statement 2 a correct explanation? Have a go. We've got what we got. Animesh is E, and Ray is E, Melanie's D, Margarita's E. Any more? It's a lot easier, that bit. When one of them's false, or both of them is false, it's a lot easier, isn't it, than when they're both true. Yeah, COSO framework is not mandatory, and the COSO risk management framework was not specifically designed for financial services companies. So the correct answer is E. Yeah. What about this one? Auditors play a central role in corporate governance. We talked about that today. And auditors validate information provided by senior management to the board of directors, regulators, and the public. What have we got? Animesh is A, Richard's A, Sylvia's A. Claudia's D. So Claudia thinks auditors don't play a central role in corporate governance. Margarita's gone for B. Helen's gone for C. So Helen thinks auditors don't validate information provided by senior management to the board of directors. Okay, so the correct answer is A. They do play a central role in corporate governance. They're assuring the risk management process. and they're very much involved in making sure the financial reporting is accurate, and that do auditors validate information provided by senior management to the board of directors, regulators, and the public? Yes, they do. And does statement 2 correctly explain statement 1? Yeah, it's one of the reasons why they play a central role in corporate governance. So the answer is A. It's tricky when they're both true, but you just got to put that word because in and say, does it make sense? And if it's true, it does kind of make sense, doesn't it? And then final section B question. Changes in business risk environments have resulted in flexible risk management structures. And the senior risk manager's role is to stay aware of potential shifts in global business and risk developments. So what do you think? Brenda's B, Noreen is B, I think, is that right? You're off on this one already, B. Yeah, so they're both true. Yeah, they both seem to be true. They both sound true, don't they? And they are true. But they're different, aren't they? They're talking about slightly different things, aren't they? And so statement 2 is not a correct explanation of statement 1. And then finally, a section C case study question. Here you are. It's a property insurer. In the last 3 financial years, they've had combined ratios of 97, 103, and 99. They've had natural catastrophes have impacted their property portfolio, and climate change is a key risk which is generating more of these loss scenarios. They've got a board approved policy regarding the selection of its reinsurers. They must have a minimum security rating of AA. Additionally, all reinsurance contracts must include a downgrade clause within the benchmark specified as A-. So you can see that they're giving you a bit of context. And I think actually, if you look in the specimen exam, they might give you more context than that. And I've just made sure it fits on the slide. But they're basically setting up to ask you questions about insurance companies. So they've got combined ratios. So I'm guessing there could be a question on here about the business model of an insurance company, possibly that, but probably not in unit in module 2. There certainly might be an underwriting risk question because they're giving us questions about natural catastrophes. Could be an emerging risk question because I mentioned climate change. It could be a credit risk question because they're talking about reinsurers, which is clearly relevant to credit risk of insurance companies. So they'll ask you 4 questions, and I've just given you one of them. If in addition to XYZ, its main competitors also suffer major insured losses due to climate change, what are the most likely effects on the insurance sector? Again, this is one of these that giving you to choose 2 from 4. So what do you think? Yeah, so it's one of these ones. You can eliminate the wrong answers. An increase in market capacity, that doesn't sound likely, does it? If there have been losses, a loss of investor confidence, that sounds possible. A need for recapitalization, possible, depending on the size of the losses. A rise in market share prices. Share price is going to go up when the insurance industry suffered a loss. Insurance industry is quite funny. It's possible that the shareholders start buying the shares because they anticipate prices will go up. But I would think to start with, the share prices will go down. So I'm thinking it's B, 2 and 3. Very good. Okay, so I'm going to, as I say, I'm going to send you email or I'm going to send you, as I say, around about 50 questions, sort of section A, section B questions, which will be, hopefully you can practice. So it's not a full exam, but it's going to be quite a lot of questions just for you to practice on. And at the moment, I've done them by unit, so you can see how well you're doing in each unit. And obviously, I'll send you the answers to the questions, and in the answers I'll flag where the questions have come from. So make sure, as I say, when I did it, I tried to get into all that essential reading, not just stick to the study guide and Hopkin and Apostolic and Donoghue. Is there anything else you would like from me? As I say, you can probably contact me directly through the discussion forum, or you can email the IRM and say, can you ask Neil the following question, or whatever. So do that in the first instance. Is there anything you would like from me? Who's coming tomorrow? Anybody coming tomorrow? Module 1 tomorrow? Bit the same, module 1, in the sense that obviously the revision and study techniques are similar. The reasons why people fail the module exam are similar. It's probably, there's more in module 1 when I wrote all those questions. There's probably more in module 1. I think the module 2 is written with a written exam in mind, and it's harder to come up with multiple choice questions on. Module 1's probably more in it, more, you know, probably there's more facts to learn in module 1. Yep, you're coming tomorrow. Hopefully the weather's still good. I am. Well, Richard will read it tomorrow. Okay. Okay, I'll tell you what to do. I'll tell you what I'll try and do this afternoon is I'll try and get out the module 2 questions. I've done them, but I've got to tidy them up. And then maybe if you're coming along tomorrow, make sure you have, I'll try and ask the IRM to send it out before tomorrow's webinar. And then maybe that'll give you an opportunity to not have done the questions, but you may have a look at it and say, you can give me some feedback on them tomorrow. Yeah. Sylvia, it's a similar webinar, Sylvia. So it's on the last 2 units of unit module 1. And then it's practice questions on module 1. Yeah, and the bit in the middle, you probably go, oh, I heard that yesterday, because it's just about revision and exam technique. Some people might not come today and come tomorrow, or vice versa. Good, nice to see you, Noreen. I'm not dashing off, but I'm finished. Yeah, I'm going to get on and try and circulate those module 2 questions before tomorrow, so you can have a look. And if you come tomorrow, you can say, "Oh yeah, Neil, thank you." Or, can you do this with them? That will help me. Good. Nice to speak to you, John. I'm going for a cycle now. I'm going to go past Long Ditton Recreation, so I'll look it out for you. Good. Okay. I'm going to sign off. Oh, you made homesick. I don't. Were you homesick? Hong Kong is very different from Thames Ditton, isn't it, John? It's really interesting. I imagine there are days that you just want to be popping over recreation ground at Long Ditton, and there are other days where you think, wow, it's amazing, we're in the centre of this amazing city. It's probably, they are different, aren't they? Wear a mask. I don't have to wear a mask when I'm cycling, Rita. Not in the UK, at least. I will wear a mask if I'm going inside, which I might do. Good. Hopefully see or hear chat with you virtually tomorrow. Yeah, nice to see you, Claudia. Nice to see you, hear from you, Animesh. As I say, the lists and the key terms are in the LinkedIn forum. Good. Cheers.